It's a random Tuesday night, and you're staring at a balance that is way lower than you expected. You scroll through the transactions. $12 for lunch, an $18 takeout order, a $7 coffee, and a small online purchase you barely remember making. You didn't buy anything crazy, yet the money still disappeared. Most people assume they lack self-control, but the real issue is how a single bank account is structured. When you log in and see a large balance, your brain immediately registers that you have plenty to spend, completely masking the upcoming bills already committed against that money. This leads to frictionless spending. As behavioral economist Richard Thaler found, humans are terrible at mental accounting. If your cash sits in one pile, your brain treats it as one giant pool of spending money. Over the next 5 minutes, we are going to build an automated 2-account system that removes this mental math entirely and stops overspending by design. Step 1. Grab your most recent bank statement or a notepad. We need to identify your core baseline number. Look for your fixed expenses. These are the non-negotiable costs that show up every month: rent or mortgage, utilities, insurance, and regular internet subscriptions. Do not include flexible spending, like groceries, dining out, or gas. Mixing those in will ruin the logic of this setup. This chart shows how fixed bills stack up for someone earning $3,000 a month. $1,200 for rent, $200 for utilities, $150 for insurance, and another $150 for phone and internet. This creates a solid fixed expense block totaling $1,700. Subtracting that $1,700 from the original $3,000 shows the strict mathematical reality. You are left with exactly $1,300 to split between spending and saving. Isolating this specific baseline amount is a mandatory step. It forms the foundation of a system that relies on structure instead of daily willpower. Step 2. Log into your online banking platform and open a second free checking account. Most banks let you do this in seconds. Go into your account settings and rename these accounts. Label the original one strictly as Bills and the new one as Spending. The Bills account has one golden rule. It exists exclusively for auto-paying your fixed expenses. Zero manual spending is allowed. To strictly enforce this rule, completely neutralize the debit card tied to your Bills account by destroying it. Think of your environment like a candy bowl. If a bowl of candy sits on your desk, you eat it. If it is hidden in a cupboard, you eat less. Money works the exact same way. By moving your bill money entirely out of reach, you eliminate the friction of spending and make poor financial decisions physically difficult to execute. Step 4. Navigate to the Transfers or Automation section within your banking dashboard. You need to set up an automatic, recurring transfer that pulls money from your primary paycheck account directly into the new Bills account every payday. This specific transfer amount must exactly match the total fixed expense number you calculated back in Step 1. With this system running, your spending account now displays your true, guilt-free money. The visual clutter of upcoming deductions is gone. This single, accurate number completely eliminates the exhausting mental math that previously caused you to overspend. You know exactly what you can afford right now. Automating this transfer permanently shifts the burden of money management. You stop relying on flawed human memory and start leaning on an infallible digital system. If you followed these steps, your financial life is officially on autopilot. The candy bowl is permanently out of reach. But the most surprising benefit is the total elimination of financial panic when those massive monthly bills auto-draft. Managing money becomes dramatically easier when you realize the best financial systems are simple ones that align with human psychology. Stop relying on willpower. Start designing smarter environments. If you want more actionable wealth-building systems like this one, subscribe to the channel.